No, I emailed Chris Ketchmar this afternoon before I left. I haven't heard back from him. So if he sends something, I can forward it tomorrow. But I don't have anything right now.
So we'll skip that. We'll pass over item 1.
Yep.
The stream is all set.
All set?
That's right. It's on live now.
Who starts? Me?
Yep. You call the meeting to order.
A meeting of the Risk Management Advisory Board dated January 24th, 2022 is called to order. For roll call, Kathy Gobes.
Mute.
I think she's muted.
Yes.
Ian Green.
Here.
Jeff Caddison here. Bob Hare is not here. We have 3 members.
There we go.
have a
Sorry.
quorum.
Here.
There's Kathy. We have a quorum. This is a meeting that was delayed from January 10th for 2 weeks. Who will be taking minutes? Bob Hare is the secretary. He's not here.
I'll do it since I'm going to probably have to get them written up. So I'll do it tonight.
Great. Thank you, Lisa. Agenda item number 1 are the investment results. We were intending to discuss with Chris Karchmer, who is not going to be here. Is that correct, Lisa?
That's correct. I will obtain his investment report and I will then distribute it to the group for review. And if discussion needs to take place, we can add it to the agenda for the upcoming, the next meeting, which is, where is it? I printed it, can't find it. When's the annual? I think it's May is our next meeting.
These would be different than the results we looked at. He has a new report. Is that right? Because we did review results with him in our unofficial meeting whenever that was, December.
How often does he update it?
They update them every month. We did have a pension board meeting this morning, and Chris was at the meeting with the pension board. So he did go through the results of the pension fund, well, obviously a different fund, but he did provide updates through 12/31 in that meeting this morning.
I'll reach out to him and find out what his latest is. And if it was the information that was at the prior meeting, I will notice everybody. If not, I'll obtain what the current info is, and then I'll get that one out to you.
Okay, because if it was the prior one, we went through it. Well, it was the 3 of us though, right? Jeff and
That's
Ian?
correct.
But I would imagine that he's going to have the December 31st results for us this time. So the prior one wasn't the year-end stuff.
Yeah, no, I mean, obviously the data moves forward. I don't think we look at it every month typically. So I just didn't know if it would be enough to have with the review from last month, but we'll leave that to you, Lisa, to find.
You're right, Kathy. We don't, Chris joins us a couple of times a year.
Yeah.
Right.
Yeah.
Yep, usually I think it's twice. But let me check with him. I'll see what he's got, and then I'll email the group and let you know where we're at.
Okay.
Item 2, quarterly health benefits report. Rick?
Yeah, hold on 1 second. The custodian's coming. I want to get in my trash.
Sorry about that. So I sent over a couple of different documents. One was the results from last fiscal year, and I'll talk through that first, and then The other one was an update through November of 2021 for the current fiscal year. So what I'd forwarded over, the larger report, is for the town of West Hartford. I'll talk through a couple of things that are happening. So as of July 1st, we have now moved 20 of the town and Board of Education's 21 bargaining units over to the Connecticut State Partnership Plan. So up until July 1st of this past fiscal year, this is the result of, which is a little more comprehensive than we may get next year because we are now in the State Partnership Plan. So what happens with the State Partnership Plan, and we've talked about this in past meetings, it is a self-insured plan that we are participating in, but we are billed a fixed rate. So essentially we receive what looks like a fully insured rate, you know, $900 an individual, $1,500 for plus one, $2,000 for family. And depending on our enrollment, we pay that fixed amount every month for the entire fiscal year. So from July until June 30th next year, that's the amount we're going to pay. If our claims come in lower than that, then, you know, the state has, we've done okay through that state plan. If we go over that amount, we aren't balance billed for anything. So even though we're participating in the self-insured plan through the state, we're essentially, you know, I guess you could look at it as if we're fully insured.
It's a fixed price plan in essence.
I would
Excuse me?
describe it as the state is insuring it for us. Yeah. They're setting fixed rates and there's no adjustment for experience.
Yeah.
Correct.
So the state is self-insured and absorbing losses plus or minus, but the town is fully insured because we're just paying fixed rates.
Yeah. So moving forward, and you'll see it in that other report, that one-page document that I sent over, that as a summary. We can continue to do that, you know, as we move into next year and the year after. Some of the detail that you'll see in this report, the one we're going through right now, we may not necessarily have. So we get some information from the state in terms of what our claims is, our claims experience is, but it's dated, it's usually a quarter behind. But we generally know how the state plan is doing overall, and we know what our claims are in terms of premium. But we don't get the robust report that we normally we're used to getting from our past carrier and from Anthem as well. The one union that is not participating in the state partnership plan right now is the fire union. So we are self-insured through Anthem with a high deductible health plan for our 88 firefighters. But for our other 1,900 or 1,810 full-time employees, we are in the Connecticut State Partnership Plan.
So Rick, what's the plan for getting the fire over? Because 88 employees is pretty small to be self-insured.
It is, I know. So we're in negotiations right now with the firefighters. Yeah. Okay. So, but you know, it's a high deductible health plan. The experience has been pretty so far, anyways. Since we've carved out and been on our own, it's been running well. So the experience has been almost what we'd expect it to be, even despite the fact that it is such a small group. To your point, Kathy. Yeah. Normally a group of that size is not credible to experience. You know, look at the experience and try to rate it that way. So.
Why would they opt to stay in their self-insured plan rather than moving over the state?
So they, you know, the firefighters generally have followed the international, which is the national union that covers, that represents the firefighters, not just here in West Hartford, but throughout the country. And they've been a proponent of high deductible health plans on a national basis. So they were if folks remember, and Jeff, you might be the only one that goes back this far, our firefighters were the first ones to join the high deductible health plan here in West Hartford, even before our teachers did. So it's a sense of pride for them to have, collaborated with the town and with other municipalities around the country and helping to address healthcare costs. We just happen to find the state partnership plan has been a benefit to the school district for a couple of years now, and now the town, where we've saved, in excess of $2 million in making this change. And the plan design itself is actually a rich plan compared to a high deductible health plan. So it's, we're having those conversations, and we'll keep you updated on how that goes as we move through those negotiations.
Over time, you'd expect the state to probably also move to high deductible plans.
Yeah.
So
they are, their union contracts from a benefit perspective. You'll remember they opened up their contracts with that SBAC agreement a few years ago when Malloy was governor. And at that point, I think they extended the benefit contract by a couple of years. I don't think they can negotiate a change in their benefits, at least without the union agreeing to open up the contract until 2027.
Oh, wow.
2026, 27. So they're locked in for a few years anyways. Okay. But you're right. I do think that'll be a trend that we'll probably see again in the future.
Does that mean that they can't switch to the state plan until 2026? Or they
No, we can. No. So what that means, Ian, is that the state plan itself, the plan design won't change. So, which is a benefit for union members who are covered by a union, because they know they're going into a plan that won't change for a couple of years.
Oh, the state plan won't change. Right. Okay.
Yeah,
but
the state plan will not change.
Our West Hartford firefighters can join that plan at any time they want.
Yeah.
And
we would.
Do we know what the difference is in the cost of us paying for the separate plan for them versus if we paid the?
So right now, their rate is a little bit lower in the high deductible health plan than it is in the state partnership plan. However, to Kathy's point, it's a small group, so it's 88 people. You could have one large claim that will swing that experience in a negative way. So I would expect those rates to, if we were to remain at this size for any indefinite amount of time, to go above the rates that the state are charging us for the state partnership plan.
And then if there is one or multiple big claims, does that mean that the town is on the hook for it, or is the town then reinsured with somebody, or could it be?
We are reinsured. Yep. So we have a individual stop loss limit of $350,000. So we self-insure the first $350,000, and we get reimbursed for anything above and beyond that. In fact, in the report that we'll go through now, you'll notice that we did. We received about $1.2 million in reimbursements on large claims last fiscal year on our overall self-insured plan that the town had prior to going to the state partnership plan. Okay. So as you can see in this report, I'm sorry, go ahead, Jeff.
Sorry, I was just saying those are all individual claims that went over the 350 then, and that's where we got reimbursed.
Yep.
Okay. So the
actually, if you want, we can jump to that page.
The premium on the stop loss has got to be pretty significant then, I would think.
Yeah, I want to say our premium is around $170,000 a year.
But you got reimbursements of over $1 million?
Yep. Actually, do we have that in here? Hold on one sec. Sorry.
Good deal.
Oh, no. So the stop loss last year was $347,000. Our stop loss premium was $347,000.
Still a good investment.
Yeah, and we were reimbursed. If you turn to page, we can jump to that just quickly since we're on the topic. Turn to page 3 in that handout. And they've identified 5 claimants and what status, whether they're active or retiree, what plan they're in the old PPO, and then the health condition that they were dealing with, and then the total number of claims that were paid for each of those individuals. And you could see there are $2.3 million in claims paid out for those 5 folks, of which 2 of them went over the 325,000, not 350. And we were reimbursed $1.2 million this past fiscal year.
You had the 350 in your head from the premium.
Yeah.
Yeah. So, but the stop loss limit, they're showing claims over 100,000 and claims over 325, but the reimbursements are just over 325. Is that looks like what it's saying? Okay.
Yeah. So what they're illustrating are the claims that were over 100,000, and then the ones that hit the 325.
Mm-hmm.
And coverage is based on medical costs rendered during a 12-month period of time, correct?
Yeah.
Correct.
Yeah, it would be based on 12 months of incurral dates.
Very different than workers' comp.
Yeah. Last year we had 8 individuals that were over $100,000, so it's down a little bit this year. Overall, our experience has been positive.
Rick, this piece that we're looking at would have included a partial year for the other 20 units that were moving in July, right? This isn't just the fire.
No, this is everybody. Correct.
Right. So,
yeah.
I don't know, rough rule of thumb, you'd expect, something like 3% of your population, 3 to 5% of a population is going to drive over 50% of your expenses. So, and they tend to then be really big claims like this kind of stuff. You're in the hospital for, a week, 2 weeks, something like that. You're going to see big claims like this.
Yeah.
So I think you would certainly expect the incidence of this to drop when you only have 88 people, but now you just have a lot more volatility. You could go 5 years with nobody and then have a year with 2, and your claims would be all over the place.
Yep.
Has COVID had any major impacts on the numbers?
Yeah, we think overall it has. Jeff, probably, believe it or not, in a more positive way. During that first part of the pandemic, we do track our COVID costs separately, or we were able to prior to joining the state partnership plan. So our total overall COVID costs to date are less than $100,000 that are associated with COVID. So those are pretty low. But overall, especially earlier on in the pandemic, folks weren't getting to the doctor. Everyone was locked in, isolating in home, and not going to the office, not going anywhere, and in a positive way for our healthcare claims experience, they weren't going to the doctor, they weren't getting sick.
And birth rates are even down. So I don't know if they were for this population, but more broadly they are. So there's a lot of reasons that medical costs are lower.
So that under $100,000 figure may include a workers' comp component in addition to health, I would think, given the governor's order from 2020.
Yeah, I guess technically you're right. If something were to be found to be compensable through workers' compensation, then we would carve it out. But I don't think that'll happen.
Mm-hmm.
Lisa, I don't know what are your thoughts on that?
Well, we had our first official formal notice of claim on a large COVID case come in this week. So they're going to attempt to make it workers' comp. The person had a very severe reaction, a lot of complications in the hospital. I feel confident it's not going to be found compensable. But right now we don't have anything really on the comp side because we were paying everything through the health plan or through the COVID relief fund. So it really didn't affect our workers' comp numbers at all. If anything, our claims are down on comp because people were working from home. They were quarantining, went home. We didn't see the rise in comp cases or liability cases during COVID. If anything, our numbers on the P&C side are down.
Unfortunately, I guess from a life point of view, the Connecticut experience was early enough in COVID that we had people infected and dying, as opposed to the time when we started to figure out how to deal with COVID and you have people infected and living with a lot more care. So from a healthcare point of view in Connecticut, the healthcare costs being lower make a lot of sense to me. Not necessarily good news for the people that died early on, but we were in that early phase.
Yeah.
That was heavily nursing home too, as I recall.
Right, and that's the other thing, is much heavier in the people that weren't working than the people that are.
Yeah.
And we did lose a retiree to COVID, a young retiree actually. But I believe that was the only death
Fatality.
that we experienced.
It's good.
Yeah.
Hopefully we're ebbing and it'll never come back, but I don't know.
I know.
I miss
Turn to
restaurants.
page 2. You can see a breakout of claims by month. The one thing I would highlight, if you go to that top portion of that exhibit up top, you see the drug rebates. You know, we had about $1 million in rebates last year on a prescription drug plan. Those will go away now that, you know, most of this does go away now that we're in the state partnership plan. We are no longer eligible for those rebates that we were receiving through our participation in the National Employer Pharmacy Purchasing Coalition, the NEPPC.
But when you evaluated, you took that into account, I assume, when you were saying it's still saving money, it's after that, right?
We did, yeah. Yep. Still saving money after that.
Yep.
So we just net that out of our overall prescription drug costs, is what we've done in the past. Any questions on this exhibit? And then if you, the last two on page 4 and 5, you have our claims, overall claims for fiscal year ending 2012 to 2021. And this is just the town again, not the Board of Education. You can see that they've dropped pretty significantly for this past fiscal year, which we just talked about. And you can see that illustrated in our per employee per month claims costs as well on page 5.
Good. Thank you.
Shows the decrease as well.
Thank you for the per employee view.
Oh, sure.
It's good.
So that's the town experience. And then we build in the board claims into that fiscal year document that we sent over, the quarterly health update. So this builds in all of the board expenses into the summary as well. We're down overall 2.5% last year, trending up a little bit right now at 3%. But I'll talk with Lisa Newton in terms of the impact on the risk management fund, because what's included in this document is when we move from the state partnership plan, or from the town plan to the state partnership plan, we ran off our claims and paid them through the health account. But we may offset that with reserves that we had set aside in the event that we made this kind of change. So there may be some accounting that'll take place that'll lower this 3%, but I'll talk with Lisa Newton about that for the next meeting.
So, Rick, just so I'm understanding though, I mean, you would expect if you ended it that you would use your reserves, because are you looking at but the 3% is still just claims, right?
Correct, but that includes the runoff claims. from
But it
the
normally
old-
would. Like the period before had runoff claims because they don't all, they never all show up in the current year. So there's always some running off to the next.
Yeah. But when
So,
we moved the board plan over, we actually used the reserve fund to pay for the runoff claims.
okay, so then you're not comparing apples and you've got two different bases. Okay,
Right.
I see what you're saying.
And we may just leave it alone and leave it as is. And that is the real number with the runoff. So we actually, so for example, Kathy, for July, we,
I'm seeing through June of 21, right?
yeah, so that's a typo. So that
Okay.
should say November of 21. Sorry. Now that I'm looking at it, you're
Bottom
right.
line. So then
Yeah.
the second June 20 should be June 21.
Exactly. Yeah.
Okay.
Sorry about that.
That's right. So it's June 21 and then November 21.
November 21. So those first couple of months, so July and August, although August dropped down quite a bit. Those July numbers include the runoff from the old plan as well as the full premium for the state partnership plan.
I see.
So
Yeah.
in reality, though, that last number, the November 21, is compared to November 20, which was probably impacted by the COVID shutdowns, which really depressed the numbers from November 20 and a few months before that. So
Yeah, but it would still be depressed for that, for the most part. It's not like we've seen a full opening. So I
The
think
number would-
it's a bigger impact that you've got runoff and full premium in this period. And in the prior period, you don't have the runoff because you were paying that out of reserves. If I understood you properly, Rick.
Yeah.
if
So
the
June
comparison
of
was done,
19, we'd have to go back to 2019 for the runoff from the board.
Okay.
if it was compared to 2019 November, the number would be even lower, the percent increase.
Yeah.
Okay, so your November of 20, you didn't have that happening then.
We did not. It was November of, so June 19, that's when we moved the Board of Education over.
Yeah, okay.
Yeah. And if you look at those monthly claims overall, they're pretty consistent.
Yeah.
Whereas this time we did have a little bit of a, so I believe we funded those runoffs through the reserve fund.
So not in
Didn't
here.
account for it. Yeah. But I'll confirm that with
Okay.
Lisa.
So just in terms of things to think about for the future of this is when you mentioned having less data, that's pretty common in what is sort of an inside fully insured arrangement, right? So they're not going to give you all the details, but it's just thinking about, I don't know what your options are for getting out of the state plan if you wanted to, but if you wanted to get out and get, say the rates are going up because they've got a rich plan design and they're not getting enough new members in to keep the rates low, and you wanted to get out, then what data would you need to go out to bid? Do you know
So
what I
we
mean?
would need, and we do get monthly claims, but we don't get the details of what those claims look like.
So you would
so-
probably need monthly claims and then some data on large claims. I would just want to keep yourself in a position where if you wanted to go out to bid, even if you didn't have it on hand every moment, that you could have the data you needed to go out and check the market.
Yeah, I agree.
And I think it's probably a ways out still, but the reality, they're saving some expense money by doing it this way, and that will help for a while, but then it's likely, especially with a plan design like that, that you see trend increases that push it up. So it's just something you want to keep an eye on, especially if the state itself is going to be tied in till 2027.
Right. Yeah.
I don't know if they gave you rules of getting out, like you need to give
Yeah,
them.
so we've been in now, so we had to stay in for 3 years. And then if you left before those 3 years, there was a clawback. And I don't remember the exact details,
That's
only
fine.
because we're in our 3rd year now.
Yeah, it's
So we're
fine.
less concerned about it. Now we can move whenever we want.
Okay. Annually, I assume, though, you got to give them some
Yeah.
notice and stuff, right?
Yeah.
Okay. So then just make sure you're getting the data so that you could shop the market if you needed to.
Yeah. So that's it on the health.
Overall, it sounds like a good report. Any other
Yeah,
discussion?
We'll enjoy it while it lasts.
Kathy, from what you see on the health side, is inflation impacting things?
Well, shortages, I don't know if I would call it just inflation, but certainly shortages. But healthcare costs have exceeded inflation for 40
Ever.
years. Yeah, I mean, and I'd say that the pressures there are only getting worse. There's more and more consolidation in the healthcare delivery system, and they have for years been organized to manage their revenue. They're not big profit. They don't make a lot of profit, but they are focused on bringing in revenue. And the way they do that, of course, is by spending money to keep their facilities as current as possible and have the best tools. And those are the kinds of things that drive up costs. So there's no real breaks in our healthcare system the way it is. So I don't see anything that stops our healthcare inflation expectation from being several points beyond inflation.
Which means that it's probably increasing over where it stood a couple of years ago,
For sure.
just like
For sure.
college tuition.
For sure. Very
Yeah.
similar
Yeah.
in some ways.
Yep.
There's a
Any
little
other
more,
further
sorry, I was just going to say there's a little
further
more
dis-
competition across colleges than there are across some of these healthcare systems, but
Very
same
true.
concept.
Very true. Yes, consolidation has changed the world a bit.
Yeah.
Any other discussion on the health costs? Next agenda item is to review the risk management programs and the role of the Risk Management Advisory Board. Lisa, do you have information for us there?
Well, this is kind of an odd topic because the program, the risk management programs, typically we just go over our budget items and what programs that are part of the risk fund. And then we briefly talk about what your role is a board and what's basically expected from you. So what I did was I printed out our risk management budget. And I just wanted to briefly talk about the programs that make up the risk fund. So when we're talking about the risk budget, we're talking about, like we just did, the overall health plan is part of the risk management fund budget. It's a large portion of it. Rick and his group and Lori Kearney oversee that. I really don't have an active role in that piece of the budget, but it does fall under my oversight. One of our line items that we have is our administration line item. And in that line item is all of our payrolls, our operating costs like dues and subscriptions and registrations. So it's our kind of our training and catch-all. We also have the workers' comp program, which we've talked about. We talk about the claims. We look at the program overall through an actuarial standpoint. Right now, our workers' comp claims are down, which is very good. We've been trending downward over the last 2 years. Again, some of that could be COVID related. I'd like to think some of it is safety related in our training programs and awareness programs and interactions directly from our division with staff on both the town and the board side. So we are
Lisa?
seeing, yep.
I'm sorry to interrupt you. Are you reading from something we have?
No, I didn't send out the budget because it hasn't been approved yet, so I'm just using it as a guide.
That's fine. I was
Um,
making sure I wasn't missing what I was
yeah.
supposed to be looking at. I'll continue
Yeah.
to listen.
Yeah, we submitted our proposed budgets this month to the town manager. So until they get approved, I didn't want to send it out. But I can tell you that the workers' comp liability payments, I did put a slight increase in the projection based on the actuarial analysis for this coming year. We have the potential for 2 large claims to be settled. And I think if we're able to negotiate those 2 to settle, it'd be in our best interest. Their potential for permanent total claims.
Workers' comp claims.
Yeah, where the person could be determined permanently totally disabled by their doctor. We don't have any right now that are permanently totaled. So when we are anticipating there is a potential, we try to hold monies aside from any other like smaller claims settling, 20,000, 50,000, 60. I try not to entertain those settlements when I think there could be a potential for a larger claim to settle that has more long-term exposure for us. So we are thinking there could be 2 coming down the pipe that I would like to think about settling. So I did put a slight increase in that line item for this coming year's budget. As far as the,
Are there
what's that?
case reserves that are set up on those claims?
Yeah, the
But your
case
concern
reserves are
is- But is there a concern that they may not be sufficiently reserved?
No, the concern is that our retention is up to 600 on the non-public safety employees, but it jumped to 750 on the public safety side.
Yeah.
So we're going to own more of the exposure potentially on one of these claims. So we're going to have to pay out more. So that's why I bumped that number up. So before our excess kicks in, we're going to see a little more exposure than we had in previous years.
Does the case reserve reflect that currently?
Yes. Yeah. So, we definitely watch them, and when we have any inkling that there could be a potential for, a serious surgery or, this is, potentially a health issue, we try to reserve those accordingly. And I have to say PMA does a good job with the reserves. PMA is our third-party administrator right now, and we had a 3-year contract with a 2-year option to extend. We're in the first year on that option, with the probability, I would say, of extending that next year. And then we will be going back out to bid. So for TPA services, which is a very big undertaking. But right now, I mean, the workers' comp program is, really strong. It's my little baby, and it's reflected in our numbers. So, John Stewart, we hired internally last year. He brought a lot of experience. He was our claims adjuster at PMA. So he's very familiar with the files. The people are very familiar. Employees are familiar with him. He's got a very good work ethic with our employees, and I think that has a big contributing factor to managing the claims. I mean, we're in them every day. So I'm happy to say go ahead.
I think the October 1st, 2021 loss cost filing from the NCCI in Connecticut, I believe was a 14% decrease. So there's a lot of favorable trends in workers' comp losses.
Yeah,
I didn't look at the specific class codes that the town would have, police, fire,
Yeah.
municipal employees, but the trends in Connecticut were very favorable over the last few years.
yeah, and we're taking advantage of the voluntary compliance programs through ConOSHA and our fire department right now. So they've been out doing some direct work in loss prevention with fire. We had an OSHA inspection last year in February at 3 of our locations. So again, it just reinforces safety and eyes, that we're out there, that OSHA's out there. So, I think we do a really good job with that program. Heart and hypertension is also part of the risk fund. We increased that line item by 20,000 this year, only because we're seeing an increase in the prescription costs for the maintenance medication for the folks that are, on long-term maintenance meds for their heart conditions. So I was watching the payments on the medical side, and the costs are going up. So, rather than coming in under budget, we decided to try and increase that a little bit this year, and maybe do a 5-year projection on some of the younger folks that are on the H&H meds, and cut it back to like a 2-year projection on any of the folks that are, I use a 78 and up age. So on a male 78 and up, we usually only do a 2-year projection. It's kind of a morbid thing to talk about, but we have to. And I know a lot of the folks, so I know their treatments and their lifestyle choices and what state they're living in and how active they are. So, we try to keep those right to the wire as much as possible. And I think PMA, again, does a good job with that.
How many claims and incidents is still open on H&H?
There's probably 40 something on the fire and maybe 40-ish on the police. So we're about 80 overall. Some
All
are
treating
active,
Yeah.
some are active and some aren't. Some will just go for their annual stress test. Some are on maintenance meds. As you're seeing them getting up in age, they'll start every now and then need to go in for, we saw one with COVID go in the hospital for breathing issues, and they weren't sure, so they wanted authorization to do a stress test while the person was there, or an EKG, and we authorized it, but then it turned out that it was COVID related, so that went on the wayside.
The H&H program required a hire date of July 1, 1996 or prior, or June 30, 96 and prior. So it's been in runoff now for 26 years,
Yeah.
and the claims still exist.
Yep. Yeah. Because, we have a lot of police and fire that retire in their 40s after a 20-year service. And if they have an H&H claim in their 40s and they're retired, we're going to own that for another 35 to 40 years.
Right.
So, we're going to see those go away, and you can see every year or two we lose one or two.
Yeah.
But we also gain one or two, so.
Yep.
Again, the people who had that prior hire date are now leaving. So that's a good thing. The self-insured program, which is the public officials, school leaders, property, auto physical, your ALGL law, all those major coverages are all part of the self-insured program. And again, we have a 250 SIR on the property and casualty side. So our claims are down, which is good. People weren't out driving during COVID. They weren't out walking. So there were no pothole claims. There were no trip and fall. We're starting to see those come back. We are litigating right now a couple of larger potential, I'm talking about $100,000 settlements. On the liability side, some claims that have been sitting out there for about 6 to 9 years that are, have gone through the trial phase, and we're at the point where we're either going to go to trial or we're going to be settling. So we have a few of those coming down the pipe right now. I don't want to get into too many details, but we do have two larger claims on the liability side. One is a concussion of a student, and then another claim is under the school leaders policy. So for privacy purposes, I'm not going to get into that one. But we're looking at some large defense costs. So, you know, the SIR program is managed again by PMA. Ray Ashton is our senior litigation specialist at PMA, who does a terrific job with the, oh, my cat wants to come on to the call tonight. Cooper, say hi to everybody.
You
I
have
call him my manager.
coverage.
Yeah, my manager, when I'm home, he checks on my work and, you know, puts his 2 cents in. But Ray Ashton does a great job, and he's, you know, he's ahead of the game when it comes to these types of claims. Very knowledgeable guy.
Who's the insurer who comes in above 250?
That would be Berkeley Gemini.
And
So
do you review the 250 SIR occasionally to see if it makes sense to move it up?
Yeah, we do. We haven't been asked to move it up, and the premium hasn't affected, you know, it's not affecting the premium. So as long as they're not asking me to, Berkeley was about $52,000 more this last renewal than their competitor. And their competitor was willing to also roll in a couple of the other coverages. So I got on the phone with Berkeley's underwriter and said, you know, we want to stay with you, but if you're not going to drop your fee, I got to move. And they ended up coming down to literally $1 over what the other people were. So, you know, rather than moving the program, we know everybody there, but we were able to negotiate that savings. So, so we have Berkeley, and then we have Allied World and American International over them for the second and third tier coverage for 25 million excess total. The auto, physical, and property line items, we've had some claims. I won't lie. There have been a few fire truck accidents early on this year. There were a couple police car accidents early on. Really hit the auto physical damage budget hard because we self-insure those. Property damage, we did have some property damage claims. Street signs, generators. We had a car hit one of our generators at Station 5. Large dollar claims, you know, $25,000, $30,000 hits. We are subrogating them, and we will be successful in recovering that money back. John's really aggressive with pursuing those recoveries. So, you know, those two programs, it's hard to predict. Anything can happen. You know, I mean, we're going to have auto accidents, but when we have 8 in 2 weeks, in the first week of the new fiscal year, that was a little difficult. But things have leveled out. We've done some defensive driver training. We've taken some disciplinary action when need be. So we're actively managing, you know, where the money's going. And the last program is the insured program. FM Global early on said that we were probably going to be receiving a membership credit this year, which we haven't received in the past 4 years. So I'm hoping that we get roughly a 12% credit back. However, that was before all these crazy wildfires and tornadoes and, you know, all this other natural disasters hit. So I'm still pressing them hard for that membership credit. But overall, I'm anticipating a slight increase again in the cyber. Cyber's been really hard to market. We have a $3 million coverage right now through Travelers. I like to up that, but again, they're just very cautious about writing municipalities. our cyber risk assessment that we do every year through FM Global came back very favorable. The only thing that we had to implement was a 2-step multi-factor authentication. So right now we are purchasing a policy to put that in place. We may have that opportunity this upcoming fiscal year, depending on the new software programs that IT is looking at. But cyber is a hard market out there for us right now.
It's a terrible
did
market
increase-
for everyone,
Yeah.
especially the public sector. I've been reviewing some rate filings there, and educational institutions and municipalities typically get debited somewhere around 40% over most other types of businesses that would require the coverage. The trends are
Yeah,
awful. The number of claims has gone up through the roof, and the cost of those claims in addition. Ransomware is real difficult and expensive coverage to find, it seems.
Yep.
Bitcoin has made that a little tricky. It's
Yeah. I mean, we had 3 vendors, 2 bid us, 1 wouldn't bid us, but there were only 3 that threw their hat in the ring. So Travelers we were with last year, they were willing to, take us on again, but we had to implement that multi-factor authentication, which we did. So cyber, I did bump up another $15,000 to see if I can grab additional coverage or if I have to pay again for that multi-factor authentication. We did get a credit back last year on the international travel policy because obviously students weren't traveling abroad. So I was able to cancel the policy and get a reinstatement of almost $6,000 back into that account. Law enforcement, I bumped up the law enforcement liability a bit because of the legislative changes with the police defense immunities gone. People, I talked to other municipalities and they've seen a rise in wrongful arrest, discrimination, police brutality. We are going with body cams now. So I'm hoping that that will help if we need to litigate those claims. Other than that, the FM Global, the property, I did bump up the property even though they're talking about a membership credit because typically we've seen anywhere from a 12 to a 21% increase. So I decided to go with a 12 again, ask for high, go in low. So hopefully they won't come in too much higher than 12 or possibly under. We are in the 86th percentile ranking for Factory Mutual's clients. We are the highest ranking municipality that they have. They classify us with the universities and colleges. Our safety factor is the rating I'm talking about. And the only way that we could get it potentially even higher is if we were to sprinkler a few of our buildings, which is a big undertaking and a big expense. So we have like 3 or 4, Rick, I can't remember. We have 3 or 4 schools that don't have sprinklers. One being King Philip, which you can imagine is a massive undertaking. So we're doing pretty well with Factory Mutual. They provide us great engineering services, a lot of education and training. They're in our buildings monthly doing inspections. And again, we're ranked really high on our loss prevention. So, that's something we've been with them 32 years now. And, it's a very good working relationship. We do get what we pay for. I did spend a little extra money out of the self-insured program I funded to do our property appraisals. So I worked with a property appraisal specialist over the summer. He came out and went around all of our properties. Because when we purchase the insurance through FM Global, we have to purchase on actual value. And our appraisals hadn't been done since 2006. So I thought, it's best that we get those updated. So I'm waiting on the final report, and hopefully, that'll get us more in line with where we should be as far as if we lost a building. Other than that, that's about it for the risk program. If anyone has any questions, I'd be happy to take them.
I think we discussed fairly well going through each individual item.
Okay. And then the other part of this, item number 3, is the Risk Management Advisory Board's role. Your role is to advise us on proper insurance funding, market trends, things that you think we're doing well, things that you think we can improve on. If again, that the post-retirement health funding was always a big topic, to make sure that we're reserving money for those unexpected reserves and claims. So, that's pretty much the role of the board, is to monitor the programs and make suggestions as necessary.
I think when we looked, Lisa, last time at these, we just thought that the wording in some places was a little maybe out of date with how things work.
Okay.
My recollection's a little fuzzy, but I just pulled it up, and one example was that it talks about us meeting with the town and school system administration on such matters pertaining to risk management as may affect public policy. Some of that seemed a little stronger than it says responsible for advising the town council, board of education on matters relating to risk management, and then meeting with town and school system administration. So it just sounded a little bit more than what we do. And I think I'll let Jeff and Ian speak to this as well, obviously, but that maybe some of these words needed to be updated, that it's not like we give recommendations to you guys, but we don't go to the town. It says the board reviews, provides recommendations to the town council and the board of education. It just makes it sound, you might expect from that we would go to the town council with some proposals.
Yeah.
I think that goes back, that probably goes back, I'm guessing 20 years that the wording has been there. And if we go back 20 years, I think the town was probably just starting on the road of self-insurance. And there was good expertise on the Risk Management Advisory Board to help the town make good decisions there. The town's become a lot more self-sufficient, and certainly I'd be happy to work with the town on areas where I have expertise, which is basically the property liability workers' comp areas. And Kathy, you've got the expertise on the life and health side, and Ian's on the investment side. So we each bring some different expertise, but I'm not sure how much the town would like to. The town's been pretty self-sufficient in all of these areas recently, I suspect.
Yeah, and again, like we had talked about, back in the inception days of the self-insured program, about 2 years prior to me starting, it was all new, and we needed the expertise to talk about how do we do this, how do we fund it, where do we put the money, who's managing the money, and how do we develop this program over time. And if you look at where we've come, as Jeff said, the program's pretty much runs itself right now. We've gotten to the point where it's that oiled ship. And if
It runs
there's
itself with a lot of work on your part, so it's not like it's just independent, but you don't need the same kind of expert advice that you needed maybe as it started, or even before you were with it, right?
Yep, exactly. So, now it's just keeping an eye on the program and keeping an eye on market trends to see, You know, like you were talking with Rick about, you know, the budget, you know, this budget tracking report and, you know, how we're breaking down the numbers and where are we getting the most settlement and, you know, why aren't the firefighters here? And, you know, how do we work to move them here? I mean, yes, it's a negotiated thing, but, you know, is there things in the market that could help Rick in that negotiation process to sell the program better, differently, you know, to the fire department when that negotiation is coming up? So, you know, I mean, we can look certainly at those roles that are, you know, in print right now and critique them. So if anyone like to take a, you know, a stab, I'd be happy to, you know, meet with whoever or all of you or, you know, and kind of go over that maybe on a, you know, just administrative level.
I think
And then we can vote on them.
I think Kathy and I and Ian all bring one thing to the table, and hopefully other board members who would come on, and that's seeing a broader universe than what the town sees. We live and work this across a broader spectrum, and if that's something that the
Right.
town considers to be something that's beneficial, I think that could be a role for the Risk Management Advisory Board. But I think if we're going to do that, it's got to happen before the budgets are created, the decisions are made, because that's the only way you advise is before the fact as opposed to after the fact.
And that's why that November meeting that we have is always the critical one, because that November meeting is the meeting that brings us into that budget season. So our budgets are due to the town manager the first week of January. So we start putting the budgets together in December, and then they have to be presented the first week of January. So whatever, even though we're just starting the fiscal year, whatever strategies, recommendations need to come to us by that November meeting. So that's why that one is the critical one, because otherwise you miss that window. Like now, my budget's already submitted.
Mhm.
So, you know, you could give us the advice and this and that, and if we need to tweak it, we can, but finance already has that stuff rolling. So it's almost after the fact. So, you know, if you want to, you know, make a note for the board, that's the critical time. That September meeting and the November meeting, those are the two budget meetings that are most important.
Well, the
So Lisa-
November agenda currently lists quarterly health benefit status, investment results, risk management fund results, as opposed to in an advisory capacity. We're looking at results, retiree health valuation, and the appointment process and operating procedures and objectives. And I wonder if that's one of the things that should be considered is to rethink what we're doing at the various meetings.
Yep. Yeah, and how your expertise could be best served.
Exactly. And
Yep.
that requires perhaps a reordering of things.
Mhm. So if we want to add that as an item for our May meeting, we can let me make sure it's May. Let me pop that open. We can definitely do that. Let's see. Where's the annual agenda? Here we go.
I think some of it's just tweaking, Lisa, too. I think when this was these objectives, it's not, at least my view, it wasn't like, oh, let's take a 180 and take this in a totally different direction. It's more,
Yeah.
what do you really, what is useful to you all? You know, I'll use an example. I hope it's helpful, Rick, to say, think about keeping enough access to your experience so that you can go out to bid. I'm just trying to think about, all right, what can be down the road? Which ways could this go? And how are you protected? So you guys are busy doing the day-to-day. That's one of the things we can do is at least step back and say, okay, when I think about it from here, have you done this? Now, I'd say most of the time that I've been on the committee, when we make suggestions like this, It feels to me like something in the 80% of them you've already thought of, which is great. Hopefully every once in a while we give you something that you say, oh yeah, okay, I'll go look at that, or I should make sure. And I don't know, Rick, you maybe already have enough data to go out to bid, but that's just a longer term protection, right? So does that make sense?
That does, yeah, absolutely.
So then it's like when we looked at the words, and of course, I think John and the other Lisa were with us, but we were just saying, well, this makes it sound much more like we're jumping in even to like town council meetings and Board of Education meetings. Now, if the words, if what they mean is that our avenue for doing that is meeting with you guys, that's fine, but we could probably just make the wording a little bit more clear that way. Because I don't think any of us were signing up to be going to the town council and saying, here's what we think you should be doing, right?
And that definitely goes way back to my early days, when Madeline McKernan and Bertie Pelletier were heading up this committee, and they did. And the town council members would actually come to our meetings, and they were very active in these meetings. I mean, there were like 14 people at these meetings, and they went on for 2-3 hours. And but they were very active. And again, I think what happened is once the confidence in what the program was doing and how the program was running happened, they didn't feel the need to be there. And if there was an issue, that it would be brought to their attention, whether it was through us or through the chairman, because in the past we would have the chairman write a letter to the council supporting the ongoing funding of the post-retirement health benefits. And that would go out like every other year, every 2 years, just to, when the council people would change, just to say, hey, don't cut this.
Yes, this is really important, right?
Yeah, this is important. So that's how the board then became involved, but it was through one avenue, through the chair, with the chair sending an email to, the head of the town council. But now that funding has been ongoing and it's a dedicated account, it can't be touched. That kind of fell off the wayside too, because, okay, they're doing it, and you could see that it's being done. And
Yeah.
so again, those are the history of when these documents were written. So I agree. I think we need to look at them as a group. If anybody wants to take a stab at editing them and send them to me for, a review, I'd be happy to do that. And, get all 3 of your, or 4 of you, Bob's not on, but if you guys wanted to talk about that and make suggestions of how you see yourselves versus what those documents are saying.
Okay.
And I think, just thinking about on the health side, the town did their analysis, made the decision to move to the state plan. Perhaps 20 years ago, the process might have happened differently, but I suspect 20 years ago, town staff did not have necessarily as much expertise in making that decision and assessing what the best route was. Today, you've all got a lot of experience to try and figure out what the best alternative is. So 20 years ago, maybe the RMAB would have been involved. Today, we're not.
Right. Yeah. So, I mean, if you want to look at that and then, maybe collectively talk and make a.
So I'm just trying to think about how to speed it up. Nobody was taking minutes last time, right? Because we did come up with, okay.
Correct.
All right. So,
The way I'm looking at it,
The
way I was looking at it, we've really got 2 issues, right? One issue is we should synchronize what we do here with what the documents say that we do here. That's, I think, step 1, whatever that may be. And I assume we're going to probably do it for now anyways, in a way that here's what we're doing. Let's write down what we're doing. And then the second part is, should we be doing more proactively? And that could be a separate discussion where we have input into things before they're finalized, because that's kind of the whole point of an advisory board as opposed to a review board.
Right.
Which we're acting more like a review board right now.
Right.
And the documentation says we're more of an advisory board. So, yeah. So we should do that documentation first. That here's the roles, and we're reviewing stuff, and that's fine. And then we can also decide, well, should we be involved before the budget is finalized and sent to the finance group and all that, and have some input or at least advice before that's done. But
Or, and then maybe another element of that is, how is the town assessing its risks? So if you think about it from an enterprise risk management point of view, these are some the things that we review are some very specific financial elements. And even the title of Risk Management Advisory Board sounds much bigger than that, right? Of like, what are all the risks that the town's facing? And some of them, many of them you guys address, and there's some that even are bigger than what you guys address. I'm not saying that should be our charter, but just from the title, it sounds much bigger. So I agree with the two-step process of making it more consistent with what we're doing. And then I would add maybe to what you said, Ian, Lisa and Rick and John, I don't know Angela, but that you guys would also just put a little thinking into, well, what would help you most?
Yep.
And how would the town benefit most? And I know we've been having trouble getting people to fill some of the roles. What does that say about it, right? So again, it was all in the spirit of making this as useful as possible for you guys, and that when we were on our own reading it, if someone just goes through it quickly, it's like, okay, sure. But on our own reading it, it's like, is this really what we do? I'm not sure we do.
Which also brings up the issue of there are 2, I suspect, openings on the committee right now. And
Yes,
having
there are two.
more expertise on the committee, more involvement would be very valuable. And I know that the Nielsen ratings for anybody watching this meeting must be through the roof. Anybody who's watching who wants to be involved in the committee should probably contact Lisa, I would suspect, is the person.
Essie LeBreau, the town clerk.
Essie LeBreau.
Yep,
Anybody
Essie LeBreau.
who's watching out there who wishes to participate in this process, Essie LeBreau in Town Hall, LABROT, I believe, right?
Yep.
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 So maybe we can, if we're not meeting till May, maybe, if we're not officially meeting till May, I don't know if it's worth trying to have another meeting in between where we just kind of quickly focus on this, where you've thought about it a little bit in advance and each of us make a few notes and then try to quickly do that, like just 45 minutes and not try to fit it in with a broader agenda. What do you think?
In essence, a task force.
Yeah.
If you are meeting, then we would have to do a agenda as a special meeting. So if at any time the board gets together, we fall under the same jurisdiction for minutes, and it would have to be deemed a special meeting, and we could only talk about those items that are on the special meeting. We couldn't veer off.
Is that, what do you recommend, Lisa? I'm open.
I don't think this has a direct immediate impact. So my suggestion is we add this to the May meeting, and it gives us some time to revise it. And then we can put it in the May meeting for review and adoption, perhaps.
Okay.
And then that way it's when it comes back up, for the operating procedures and the objectives and all that, it'll already be done, and it'll give us some more time to really dive into it, other than trying to put another meeting in place.
Okay.
That's just, I
So
think,
do you-
if we all,
Then do you have enough from us? You had asked us to take a shot at it. I think our biggest thing, is probably as obvious to you as it is to us that there are just things in here we don't do.
Right, and I think if you highlight those and email them to me and say, like redline it and say, I don't think we do this, and or put your additions in, and you can look at that individually, send me your comments. I could compile the comments and then we'll add it to the agenda for May 9th. And, we could kind of come up with a document for May 9th. And then we can vote on it.
Okay.
And we should also, I believe, look at the annual agenda and assess if we're doing things in a timely fashion.
The annual agenda comes up in the September meeting. And it's just my suggestion, but if you're going to make comments and want to get involved in the budget, we may want to start the review in September. And then we could critique in November, because if we do it all in November, it's not going to give us very
too
much
late.
time, because we don't meet again until January.
Right.
So
Right, so
if
we'll
we
have-
want to capture the budget, we're going to have to throw a budget item in that September 12th meeting.
So we're fixed on January, May, September, and November for meetings, and then figuring out where to slot things.
And we can do a special meeting and we can add another meeting, but we decided to pull back to quarterly meetings
Mhm.
because we weren't getting the participation and it just seemed like we wouldn't get a quorum. So, rather than trying to divert all and defer all the topics, it was easier just to do quarterlies now.
Yeah.
So if you could take a look at the annual agenda, the quarterly one, and, if there's things we want to change, we can. Because anytime we post an agenda, there's always the item number 5 called other. So we can always put something in if we need to discuss it. So, that kind of leaves us that option. But if you have a special meeting, you can only discuss the items that are your listing on that special meeting. You can't add or go to another topic.
Mhm.
Is there a way that we can get from the town what's the ideal RMAB would look like to them? What, to Kathy's point, what is helpful to you guys? What's the purpose of our board? Because it's no longer the same purpose that it was 20 years ago because of the reasons we discussed. So if the town could come up with, here's what we're looking for from an RMAB, and then maybe at the May meeting, we can go through, go through it then, I guess.
Okay.
Ideally, we do it a little earlier, but if we can't set up another meeting, that's fine.
Maybe we could at least do it by email, if that's okay, Lisa, just
Yeah.
understanding
Yeah,
that.
we can.
I mean,
we
I
can.
know when I was asked to do this and I had a conversation with Sherry Cantor, and she said, the biggest thing I took away from her comments were, I don't need people on this board who are trying to do the work or make the work harder for the people that are already doing the work. So I think part of this is saying to you guys, all right, you don't need us looking at how you've calculated each number or all of that. And it's not useful for us to try to get into the weeds. So what's useful is, to Jeff, you said earlier, we sit in different places, see different things. So and have had experience in some of these areas, is that maybe we see something that you wouldn't necessarily see. So how do you share enough with us that we can give you the benefit of our thinking on those topics without you having to go through everything you're thinking and doing as if we're second guessing what your decisions are? Because that I don't think is useful.
And we all bring on the job experiences that are different and independent from what you're actually doing on the job, I believe. And we may bring different perspective in a different thought process.
Yep. So Rick, why don't you and I and maybe Lisa Newton, we'll just have a quick conversation as to where we're at and what we'll review those roles as well. And I'll come up with something and, I'll get the consensus from the people involved, and we'll go from there. And then, we can let you know, and then you guys can take a look and reflect on what you think, and then we'll just put it all together for May. It'll give us some time.
That's good.
Okay, yeah,
Sounds
as
good.
part of that, if you guys could go through the current documents that said
Yeah.
what we're supposed to do and say, is this really what we wanted to do, or is it all changed now because of these reasons that we discussed?
Okay,
And then
we
we
can do
come
that.
up with the end goal of coming up with a new documentation of what's really helpful to you guys, rather than expectations that we're not doing.
Okay, we can do that. So number 4, election of chairman and secretary. So here we are again, our annuals. If anyone has everybody wants to throw their hat in the ring, I'll open it up. We have 3 members tonight, so
Here we go. But if you can remind me, Lisa, I didn't pull it back up. I think you gave it to us last time, so maybe I have it here. Our terms, though, of where we are.
as far as your serving of term, yeah, let me pull it up right now. That's the agenda. Let me get that. Okay, so Ian, you're on your first term, which will end this December. Okay, so each term, you could serve 2 3-year terms. Ian, you're in your first term, ends 12/31/2022. Kathy, your first term ended on 2020, so you're now in your second term. So your second term is going to end in 2023.
Okay.
And Jeff, your second term is actually ending this year.
Yep.
Bob Herr's term ended in 2020, his first term. So he'll be starting his second term, same thing. He'll be ending in 2023.
Okay. Thank you.
Yep. I'll send this out as an updated list too.
So, Jeff, are you comfortable continuing as a second year in your chair role
By default, sure.
by default? And Lisa, you said that Bob had agreed to be the secretary
Yeah, this last
last.
time he was, yeah. So he's not here, so
That's hard to do. So we've decided he wants to do it again. No, I don't know. I mean, it's fine with me if he wants to continue. I don't know if he's got ongoing challenges for joining. Otherwise,
What
I would be okay to
well-
do it if he is not interested in doing it.
what we can do is if we're all in agreement that Jeff, if you want to become chair again, I need the other 2 parties to make a nomination and a motion to approve. Then what I'll ask is, Jeff, if you as chairman just want to shoot Bob an email and ask him if he'd be willing to continue on. And if he does, then we can perhaps do a vote at the next meeting, or I'll find out if we could do a vote by email.
Or can we vote? I suppose we could vote him in as secretary now, and then if he says he doesn't, we would have to do it over, right?
Yeah,
I mean, so I'll nominate Jeff and Bob to continue. Do you want to do it that way?
okay. So you'll make a motion for that.
Should we do them both separately?
Do you need 2 or can we do it as one?
No, you can do it as one.
Okay. I'll second that motion. I'll vote for.
And vote for it, yes.
Jeff,
It's
you get
easy.
the vote too, don't you?
Jeff, you can vote.
I suppose I could vote for myself, sure. Then we have to have the campaign party,
So, and then
the
if,
victory party.
Yeah, yeah, you won.
I don't
Okay.
know if do you want a motion that, so we're reinstating Bob as secretary? Do you want a second motion that Ian could do that would say that if for some reason Bob is unwilling to act as secretary, that I would be approved, so then you don't have to do it by email afterwards?
Absolutely.
All right,
I'll
Ian, up
make
to
it-
you.
I'll make a motion that if Bob does not want to be secretary, that Kathy is the new secretary.
Second,
And Jeff, you second that? Okay. Okay,
Now we can all vote again. All in favor?
okay.
Aye.
Aye.
Okay. All right. Streamlining your follow-up, hopefully.
Yay, thank you.
and most
Um,
importantly, for the audience still out there in TV land, please call Essie LeBro if you're interested in serving on the Risk Management Advisory Board.
Yes, public service announcement. Okay,
All right.
well, that covered everything. So if we can get a motion to adjourn.
So
Well,
moved.
is there any other business to discuss?
Hmm.
Hearing none, is there a motion to adjourn?
So moved.
Second,
Second.
all those in favor, say aye.
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 Any nays? This motion passes and the meeting is adjourned. Thank you all.
Thank you
Enjoy-
all.
Enjoy winter.
Have a good night.
And we'll see
Thanks,
you in the
everybody.
springtime.
All right.
Sounds
All
good.
right.
Have a
All right.
good night.
Thanks, everyone.
Good
Thanks.
night.
Bye.
Good night.